traders, welcome to the TMT stock market strategy video for Friday, March 23rd. Guys, we had 2 days of consolidation at the lower end of the range on that sell-off we had on Tuesday. So that means we had price action stayed the same within its candles range. So there was no new action, really, no new order flow, no new money coming into the market or going out for that matter. So we're kind of held hostage with this Healthcare Reform Act. They were supposed to get an announcement on at least approving it or not approving it. They pushed it back. Now it's supposed to be sometime today. Futures were up about 9. They're up about 2 now in the early morning session. So it's kind of all over the place. And I understand, kind of knew that was going to happen, especially when you had a big down day on Tuesday. We usually get a little bit of retracement, but that did not happen. So today might be very interesting. It is Friday. We usually have a bullish bias to the upside pretty much every Friday. I don't know why, but Friday's a pretty good bullish day. If they do pass the Reform Act, I think we're going to see a knee-jerk reaction to the upside. Is that going to hold? I'm not sure. We'll have to deal with that when that does happen, and of course, monitor the price action when that occurs. Now, as you know, I'm showing you, giving you free levels that we have until April 1st, until the end of next week, and then the daily strategy video will take into effect. $15 a day, guys, less than 75 cents, less than $1 a day. You can't beat it. Very true to price. And if you really are an active trader, $69 a Pro Trader Premier, we could dial down into an intraday chart. And of course, I'll show that to you again for the new guys that are looking at the videos. So let's move right on here. NQ Daily, okay? And by the way, we do cover all of the big futures, NASDAQ, ES, gold, and crude oil. And then we do that as well in the intraday charts on a Pro Trader Premier video. Daily chart. NASDAQ, NQ, you can see here, we're still hovering about the channel. I'm going to just move this in a little bit more. And you can see we had an inside day, 2 days of an inside day. So really no new price action. It was muted, again, being held hostage to the Healthcare Reform Act at the moment. But there's a lot of bad stuff going on out in the world, and markets are holding in here. But remember, just like we had that on Monday, the FBI on Capitol Hill getting drilled, that market should have dumped, and it didn't. It waited to the next day to dump. So could that happen again? It does look like it's forming a small little bear flag underneath the daily 21. So we'll see what happens here. We just have to wait and see. We still are above our proprietary price channels, our TMT price channels. So for that, what that means is that we are still bullish in the overall trend at the moment. Next is going to be the ES, and really the same. We are breaking down a little bit more, but we're still holding our TMT proprietary price channels. These are your levels, all right, and they're not going to go away until price takes them down. This is for, again, sorry to repeat myself for those of you who follow me, but there are new subscribers that come in every day, and I just wanted to point out that these are levels that are very true to the trend. So if price were to break into this and bounce back off it, it should hold. The dark greens are the bigger supports. The light greens are lesser of that dark green support, and same thing with red and dark red. Okay, I'm going to show you what the Pro Trader Premier video is. This is a 10-minute of the ES, but the levels remain the same on any time frame that you trade, guys. All right, so we've known already. Our subscribers have known that this is big support area here, even back on Monday and Tuesday. Okay, but now we're getting a little bit. Excuse me. We're building a better support here that we have for the last couple of days as price continues to break into this range. But same thing, and I'll give you a quick example. If you were, we had a couple of good trades the other day where price actually came in from here. We had a support area here that rallied. We sold that, and we sold that rally too as well. And then we just kind of hung in here for the last couple of days. But this is interesting developments. So now we want to watch these areas here. If this can hold this area, I would suspect we kind of roll into price, holds, and then we take out the swing high, and then we're off to the races. And this is a thin zone here. Okay, when you get price to break down really hard like that, there's not a lot of support to hold it. That means there's not a lot of resistance, so the price can break through and go higher. Okay, that's what we're looking for. That's why we're always watching these areas, these zones, and these actionable price levels are so true to the trend. We have our algorithm spit out different levels where price would react to, okay, whether it be to the downside or to the upside. Okay, free chart on crude oil. You can see that right here. We're still remains the same. We are breaking down a little bit, that we're coming into some decent support area. I would suspect we move a little bit lower. There's a lot of supply there. I don't care what anybody says. There's a lot of supply. Shale guys are coming into, really coming online hard. Okay, you have a lot of these other countries that need to produce oil. So as far as the production cuts, that agreed production cuts from OPEC's meeting in Vienna, I really don't see, and I can't see it anyway. We're watching it every week. The API numbers come out. There's a build, and the DPI numbers come out. DOE, Department of Energy, comes out, and there's also a build. So I just don't see it. Major tankers, oil tankers, parked out in the Mediterranean. There's like 10, 12 of them still out there, and can't find a home for the oil. Okay, and we're producing more oil than we ever did in the U.S. So. Something to think about. But again, it's not what I think. It's not what the production is anymore. It's really what price is going to tell you. You know, the fundamentals of this type of environment you can throw out the window, all based on sentiment right now. Gold, I like gold here. I like actually to watch this level. I'm not going to look to buy gold at these areas at the moment. We do have a gap area. Eventually, it's going to need to be filled, as we did here. Okay, there's a big gap, a small little gap here, excuse me, but this is where we fill the gap. So I'm looking for a back test lower. If we get any type of risk on event, gold will definitely sell off, because gold has rallied only on a risk off type of environment of fear. Okay, here's the GDX. GDX hasn't really gone anywhere. And that's another reason why I'm not looking really to buy gold at the moment. The miners really usually go first on the next move, or any of the move first. They usually go first, and then gold kind of catches up to the miners. But this is kind of stuck here, which is okay. You're in the range. I do like gold. I do believe that gold started a second stage of a bull market run for 2017. TLT, 3 days of no price action, no movement. So that you have to watch, because we can really explode to the upside, or we could start to revert back down and start breaking down again. I think bonds have ended the 30-year bull market run. Interest rates are rising, and it's here to stay. I do believe that. I see it in the charts, but I'm not going to look to short TLT down here. There's a nice little gap area. Eventually will be filled, and if that does break this area here at 123, then we look to ride that wave up to that gap fill area. Okay. Spiders, again, holding that 50-day moving average. We had a 2-day inside day. We did get a little bit of a pop. And if you're quick enough to take advantage of that move, then that would be great. If not, step aside and wait to see. I would recognize, let's see, Wednesday's low. Okay, this is the low here. Wednesday's low and Wednesday's high. That candle that is true and still stays in place. That's the trade that you want to be watching. All right, and here are your levels. Again, doesn't go away on a daily chart. The intraday charts, the levels change every day, unless the price is just stuck in a range. IWM, same thing here, guys. We've been talking about this for months and months and months. Really no change. We have the momentum indicators making lower lows and lower highs. This is our secondary leader breaking down. Not a great sign. And we got that thin zone I was talking about here. Okay, but we have a lot of we have a big area of support and resistance. A lot of activity up here, but no price action movement except a couple of down days. So these are your levels here. We have new levels in the IWM Russell 2000 ETF, and here's that area here where I think that the first target would be this area here, which coincides nicely with this uptrend line, coincides nicely with a 38% Fibonacci retracement, and of course our value area of 130.94. Okay, keep an eye on that. And what you guys can do, the new guys, they like to take a snapshot and then copy the levels, and you could reference them, at night, because they do go away eventually. So keep an eye on them and keep a little library of these levels, and then copy them onto your trading charts. And that's how I usually do it. And Q is the same thing, kind of standing here. Looks like a small little bear flag here. I need a little bit more evidence before we do anything, guys. We're still underneath the 21 daily, and we're above the proprietary price channels. But I think technology is very expensive. I don't see any value here accumulating technology in your longer term accounts. Day trading obviously is different, but just keep an eye on that, watch that, and have a great weekend, everybody. Right? Be safe out there. Now we'll see you on Monday.